All right, welcome back to another week of the Trading Triangle. Less one this week. It's Sean and I. Hey, Sean.
Hello, how are you?
Doing well, thanks. I had a jam-packed day already. Looking forward to getting into charts. Looking forward to trading this week, even though I'm going to be out this week and traveling a bit. Should be an exciting week given all the action we've had recently. How about yourself? You looking forward to the week?
Yeah, no, I'm looking forward to the week very much so.
Yeah, good.
There's a few indicators we were going to touch on today, so it'll be interesting to see what's going to happen.
Yeah, we'll zoom in, zoom out, get a bunch of different perspectives. We won't have Kay's great inputs on the options, but I'm sure he'll comment later and help us out there. But yeah, I'll pull up the charts here, and actually, let's do this number and get right into it. Looking at the overview. Yeah, look at those. Anything jump off the page to you on last week's performance?
It's red, very red.
Yeah,
that's the only thing that jumps off the page. No, yeah, I'll let you take control of this one.
Yep, no doubt, very red. I was looking at the, as we always do, going through the numbers. So just to run through the major indexes, S&P was down 1.75% on the week, but it's still up 13.25% on the year. The Dow was down 1.98%, only up 1 3/4 on the year. NASDAQ is down 2%, over 2%, 2.11%. Still coming in strong at a positive 28.91% on the year. Russell 2K, that's the one, and really got my attention. And we'll look at IWM later, but the Russell 2K is down 3.58%, and now it's only up 3.43 on the year. Bitcoin, as I mentioned right before we jumped on here, Sean, up 83.93% on the year as of this morning, so almost 84%. Which is just incredible for all the Bitcoin fans out there. Above 30K. So Mara broke out, and I'll be talking about that and looking at what's coming next, potentially, what the charts might say. And VIX is compressed. We're at $13.44 on the VIX, down again this week. So yeah, the sideways action in the market and kind of is making new highs, but still overall longer term we're sideways and the VIX is compressing. So yeah, very interesting stuff. Before we keep going, though, real quick disclaimer, like we always do, just letting you guys know that the Trading Triangle is for informational and educational purposes only. Maybe generational, I don't know. But yeah, for educational and informational purposes only. We're not financial advisors. This is not legal, tax, investment advice, or accounting advice. Just our opinions and observations. Hopefully you find it entertaining and helpful, and when you apply it to your own trading strategies and your own thoughts. But okay, so keeping it rolling here. We've got some upcoming events, not a lot in the way of earnings, but I think we get our Fed Chair, Mr. Powell, speaking again this week. Any comments on that, Sean?
No, I mean, it's always a volatile time, isn't it, when he talks? So just be cautious if you've got trades on or if you're looking to play some trades around these kind of times. It's different for the UK, of course. If this is 9:30, so that would actually be 2:30 in UK time if you are watching in the UK. But yeah, just be careful when you're trading around these times. It can be very volatile. That's for sure. I'm sure you can speak to that.
Yeah, the way whatever Powell says, it seems like the market hangs on every word, swings one way, swings another way, and then picks a direction. So I do think that he's been pretty consistent in saying that we're going to get some rate hikes here and he said more than one, last I heard anyway. So I think the markets are, digesting that a bit. I don't know if it's priced in or not, but it'll be interesting if he has anything new to say this week or if it's just more of the same. So yeah, we'll see.
Yeah, a bit more of the same, I think. One thing he has done is stuck to his word in terms of what his message has been about. He's not really deviated from it too much, but yeah, hopefully he can kind of keep on the same track, keep investors fairly safe, I guess, in terms of the way they think.
Right, yeah. So more from Mr. Powell. We'll see what he says. But yeah, getting into the charts, because that's our favorite. I pulled up. Oh yeah, you got
to jump into the charts. Make sure you subscribe to this, by the way. We just hit half a century, which is absolutely wonderful for just a month in. We've hit 50 subscribers. I just went on at half an hour ago, and thank you very much for your support. And obviously, if you are watching this stream now, hit the like button because it does help us get out into more eyes. So go ahead and do that. Sorry, you can get into the chart now, of course.
Appreciate this, Sean. No, and appreciate all the followers. Thanks again for subscribing and Yeah, 50 already. This is great. This is great. But yeah, and maybe it's these charts that are doing it. Hopefully it is.
It must be. It must
It
be.
must be the charts. It's not us. So the 4-hour candles here I have for SPY are the first chart up. And I mentioned we're zooming in, zooming out. And these 4-hour candles are the zoom in portion. So you can see that the clear uptrend that over the past several weeks for SPY that we were on was actually broken this week and kind of rolled over a bit, right? So this might get you a little bit bearish and thinking, okay, time to pull back big time and go short with all your positions, what have you. But we'll look at the daily candles on Sean's chart next, and you'll see why that may not be the case. But that being said, I like this Fibonacci look because it does look like these levels are pretty true given the most recent run up. And that 50% line that's kind of bold in the middle coming in at 427 roughly is where I think we could pull back to, right? That would be healthy. We got some good support there. It'd be a 50% retracement of the overall run up. And I would guess we would still be holding the overall uptrend on the daily. So I did want to kind of point that out because you can get a little excited seeing a chart like this if you are, more of a bearish sentiment and think, oh, we're rolling over. But you want to look at all the different time frames. I think it makes a lot of sense. Anything on the 4-hour here, Sean, before we look at yours?
No, I just really like that level of the 50% line, and I wish I could draw Fibonacci levels. I just don't get on with them personally, but that's just a personal preference. But I like to see when other people do it, because it gives me obviously a bit more perspective, and obviously hopefully the viewers as well. But yeah, that 427 level looks pretty key to me. That 50%. We've got the 150. Is that moving average coming in below?
It is 150.
Yep. So that bit of double confluence there, and obviously probably a support line if you go further back, which we might see on my chart. Who knows? But yeah, it looks good in terms of a bit of a pullback, and like you say, it's healthy. So
yeah, a little short term.
I think with the market this week, a lot of people maybe, especially the retailer ones, might be panicking slightly. Oh no, the market's suddenly not going up anymore. I must sell all my stocks, that kind of thing. Obviously, people don't know about the market. They do that. They panic a little bit. And really, it's healthy in obviously our opinion and many other investors' opinions as well. So
yeah. You look for that key support, right? Trend lines and that kind of thing, where you're pulling back to and seeing if that you get that support. But yeah, I think pulling back here a little bit to about 427. I mean, I don't think that would be bad. If it holds around 430, 431, all the better. But yeah, a little bit of a pullback's healthy here. And looking at the daily, I'll hand it over to you. I really liked your chart here because it zooms out and gives you better perspective.
Yeah, the reason I zoomed out so much is because of that 432 level, which we touched back in mid parts of last year. And we kind of bounced straight off of it. And the reason I put it up there is because it bounced off the 200 as well. So it makes it a little bit extra kind of resistance, shall we say. So you've got the 432 and the 200 way back then, both resistance, which potentially could mean that the 432 level, when you just touched on the 430 level just then, could be a nice support level with those two. Obviously, you don't have the moving average coming in, but as an actual line of support, it could be quite nice. And it just looks nice if you see the yellow line coming up there as well, which is the 20 moving average. If we get a nice little bounce off of that in the next couple of the days, I think that would be good. I don't know if I can just ask, there might be a bit of feedback on your end. I think I can hear myself just a little bit, but not much.
Right. Yeah, let me adjust that a bit. See if that helps.
Yeah, let's see if that helps. I think it's already helped, which is good. Okay, so fantastic. We'll get back to the chart now, shall we? But yeah, that 427 level that you had on your chart, I think it could also be done, because if you look back kind of towards April, May, June, the area of this year, you can kind of see it's dipped below the 20 moving average, and it hasn't quite respected it that much, and it's respected the 50 more. And that's when my next comments come in. Maybe this the 50 moving average comes up and we kind of go down there and we touch around that 424 level, depending on obviously the time frame. If we can kind of hover around this area, then it might bring up that 50 even more to 427, in which case that would look even stronger, as we touched on the 427 level earlier. But yeah, that's what I see from a long term.
That would line up, right?
Yeah,
that would really line with what we were just seeing on the 4-hour candles, and it's about the same levels. You mentioned 427, and then if we do get a little bit of sideways action, that 50 moving average comes up to about comes up a little higher to help support around that area. Meanwhile, if the 20 holds, that's right around the 430, 432. So yeah, multiple points of confluence, and again, this uptrend it continues. Like, don't kid yourself. There's no rolling over yet. The uptrend is holding, right? So, anyways,
Absolutely, yeah. And we touched on last week. The trade is your friend. So the trend is your friend, not trade.
if you're following the trend, the trade should be your friend.
It should be, yeah.
Yeah. What is this you posted? I noticed you had another chart in here, Sean.
So this was just a little bit of fun. It's not really a chart to look at, but you see in the yellow here, we've got next week, which is this week coming, will be the last trading week of the month, quarter, and first half of the year, with the S&P up 13.8%, which you mentioned earlier. So far this year, historically, whenever the S&P is up at least 10% year to date, as of the end of June, of course, the index ended the year 82% higher at the end of the year. So which means it kind of gains 7.7 on average. Obviously, it'll be different this year because it's an average. So I just drew that line ready for us to go. So that point is obviously, it will be the end of the week. So the 7.7 inverted commas will be from the end of the week. But I drew it here, mainly for entertainment purposes only. And you can see it's kind of up towards that 470 level. I just wanted to kind of see how that makes you feel, because I've written at the top left corner there, 480. And that's very close to all-time highs. And I don't know if that's sustainable or if that's even possible, but I just wanted to get your thoughts on this chart. Add it in there for a bit of fun, a bit of entertainment.
Oh, I love this. This is great conversation. So, so I have so many thoughts. One, you have a huge 6-month, positive gain, like we've got up over 13%, right? And what does that do to money managers who have been bearish in the first half of the year that are behind, right? That maybe they've only got 9% gains or something like that because they've got a lot in cash. Is there a catch-up trade? Like, are they going to all start piling in and trying to make sure that they, get in on the second half and don't fall further behind, right? Because that's their profession. Number one is managing money, and you got to beat the markets. So that comes to mind. Two, say we run all the way to 470. I mean, what a great way to finish out the year, right? That would be amazing. And yet we wouldn't have eclipsed the all-time high. Like, we could get to 470, cool off and pull back to right back to where we're at. And if you zoom out, the chart doesn't look like we've done anything, and we've just been going sideways still, right? Like, I think the VIX would still remain pretty compressed at those levels, because we're basically moving up and down, but not making new highs yet, despite just an amazing run. So it's got me. It's really, how can I say this? It's very nice to see from a standpoint of we've got room to run potentially, and there's a lot of positive history, I guess, on our side, 82% of the time, right? But at the same time, I believe in pullbacks, and if you wait too long, then the pullbacks get nasty. So what do you think about all of that?
Yeah, I mean, it could be, it's not going to be a straight line up, is it? It can go to 460 in the next 3 weeks to come back down to 430.
Sure.
But I like I don't want to say odds, but the possibility of the 82%. But obviously there is 18% on the other side as well. And it has happened 18% of the time. So we can't, we have to take this kind of information with a bit of a pinch of salt. But I like the 82%. I think that's very doable. And obviously with the interest rates and all that kind of stuff and inflation coming down, obviously there's a few macro things going on at the moment with Russia, etc. But obviously that will come into play. So it's just more, I just wanted to add this in for kind of entertainment purposes, as you know. But yeah, I think it could be possible. Yeah, I'm a bull, so I would say that.
Yeah, and we're in the business of probabilities, right? Like, none of these charts say absolutely this is what's going to happen, but we look at them to try to get the odds in our favor, right, ahead of trades. And yeah, the 18% is a good note, though. I'm going to go play poker, the World Series of Poker, here in the next week. I can't wait. And nothing is worse than getting that 5% out or hit against you to make you lose a hand when you had 95%, odds in your favor. Yeah. But it happens, right? And just like in these spots, it does happen. So, don't ever go all in, right? But yeah, it's this is great info. Thanks for bringing this up, Sean.
So.
All right, so the Qs, I've got it zoomed in for this year, basically, and there's 2 trend lines I've noted. One that goes all the way back to dotted line that we've pulled away from, actually, and really increased the trajectory here. I should have practiced that word. And and so I've got another green line, solid line with all the highlights there where we've touched and just bounced off of it. Basically, there's the one gap where it gapped down, or excuse me, broke below the line and then gapped right back up above it. These are the daily candles, so you know, a little bit wider time frame than the 4 hours I've been looking at. But yeah, this shows that even though we pulled back last week, all the way back as much as we did, what was it, over 2% for the NASDAQ, the Qs, they're holding the trend line here. So really positive.
Yeah, I think this is just a great example of the trend is your friend. If you see this on any time frame, it's always nice to see. It could be a week, it could be 5 minutes. It's about management. So if you got in, maybe not in the first bubble, not even the second bubble, but maybe the third bubble, your indicators lined up on your smaller time frames, you entered, and then it's all about managing. So bringing that stop loss up, towards the next bubble. By bubbles, I mean the circles you've drawn.
Yeah.
And then then when it comes up and bounces off the trend line or a moving average, for example, that's when you move your stop loss up again. And it's just all about management just after you've entered. So yeah, so risk management is a key, should we say?
Yeah, and these trend lines really help with that, and that's why I use them for, right? Yeah, so just to throw some levels out there that got noted, I could see if we do break the trend coming back to 355, but that level potentially holding a bit. And if it doesn't, coming all the way back to 337 roughly, that's where the 50-day moving average is going to sneak in. So that, maybe, or excuse me, 337. I think I said that wrong. But either way, 337, 340 range, where that 50-day moving average would come in. So if we do get a bit of a pullback and retest of that dotted line, again, that's still holding an uptrend from earlier this year. So all things are still, very much pointing positive for big tech. And, that's what I'm seeing here.
Yeah, I like this chart.
Let's take a look at yours. Zoomed out, same daily candles. Yeah, what would you add, Sean?
So daily candles, obviously on the zoomed out, like you said earlier, it looks a bit more dramatic, I guess. I wasn't going for that, of course. But we have the level of 362 where we are now, and you can see that 20-moving average kind of just coming up before that 357 level. 357, yeah. So it's not the most solid resistance / support. But what I really wanted to kind of touch on is that 369 level, which we kind of bounced almost aggressively off recently. I think that was Monday or maybe the Friday before. How many candles that is. But if you look back in the chart, you can see the blue highlighted areas. It's acted as resistance / support back then as well in quite a concrete way. So if we are going to keep going up in this trend, like we mentioned, we're not going to keep going on the same thing. But that would be the level that I'd be looking to break 100%. It's that 369 level. And then I don't see much in the way to 382. But like you say, I would like to see a little bit of consolidation, maybe even a bit of further of a pullback and touch that 50-moving average. But yeah, it just doesn't look like it's slowing down, does it?
It really doesn't. I agree with the 382 being your next target. Yeah, that's what I had in my notes. I just didn't mention that. 380 to 382. So yeah, it's just, that's quite, I'm going to use the word again, see if I get it. Trajectory. That's quite a trajectory.
Dramatic trajectory.
It is. You said it much better than I did. So yeah, it's just been a run. And again, use those moving averages for, some support there, and we'll see what happens as we head into the holiday week over here we've got coming up.
I think just if you pop back to that, nice is that 200 coming up as well, the red line. So it is starting to kind of, just turn the corner. And if we stay in these kind of levels, it will kind of move up past the 304, past the 317. So that'll be something to have on our side for the long-term investors more so. But yeah.
Yeah, that's a really good point. It really is rounding nicely. And you got the 50-day cross above it. What was that, in March of this year? Which is huge. Yeah. And so here we are off to the races. It's been good. It's been painful if you've been a bear. So I'm glad we're a little bit more bullish on these videos.
Just a bit.
Just a little.
Yeah.
Well, yeah, let's take a look at the individual stocks you got this week, Sean. Hand it over to you.
Yeah. So I've got the kind of normal bunch. I had the same as last week, actually. So Tesla, NIO, Palantir, and NVX. And they're a bit different in terms of the time frames. Just wanted to kind of take a step back, take a step forward, that kind of thing. So this one is the 1 week for Tesla. And you can see a lot of things are kind of going on, really. So I've got the two lines there drawn at 210 and 300. And that looks to me like a little bit of a range could be forming perhaps in the long term, because we had a little bit of a range drawn kind of, when was that? Early to mid 2021, and then again kind of mid 2022 as well. Kind of bounce through that range. So if we can get in that range and bounce through here, get a bit of news, etc., that'd be great. But what I also wanted to bring up was the circle that I've got drawn there, the 3 moving averages. Now, this is the weekly, so they do move a lot slower in terms of the fact, well, time is more or less on the side. But what I would really like to see is the 20 moving through that 50, 100%. And then if we can obviously go in a sideways movement, that 20 will bring up, and then bounce off of that hopefully in the future. But looking at the chart going backwards, it doesn't really respect the 20 a whole lot. It respects the 50 a lot more, as you can see. Just by observing this chart, it observes the 50 a lot. So even if the 20 does come through the 50, I wouldn't expect it to be major support, especially on the weekly. But the 50 definitely would be nice to kind of curl up. We spoke about it on the Qs. If you could curl up, that would be great. And all of this information staying above that trend line, which I've drawn. But yeah, that's kind of, it's doing well. I mean, we can see lots of news. There's been a bit of negativity this week in terms of FSD, full self-driving. So that'll be a bit of a concern for long-term investors if they're actually working and they're investing enough money into that kind of thing. Obviously, they don't have LiDAR sensors either, which is the kind of tracking system. They just go on previous, what's it called? I can't remember what it's called, but previous, when you're driving around, observations, they just kind of implement that into their technology rather than actual LiDAR. Because Elon doesn't like the way it looks, which is fair enough, I suppose. It's his company. But yeah, I've spoken quite a lot already. I'm going to let you talk now.
No, it's good. I love the weekly here. I don't have too much to add, to be honest with you, other than the fact that we're above the 50-week moving average is got to be getting all the bulls riled up, and probably why there's that big candle that after it broke above that 50 that just really pushed it up higher. Just getting that good positive sentiment. I don't know how closely everybody's looking at the weekly 50 moving average, but I bet that ties in closely to some nice, signals on the daily candles as well, I would guess. But yeah, overall, it looks really constructive, and it would be nice to get to the top of that channel. If we get a little bit of a pause here, only to see things move higher, I don't think it'll take too much to get there.
Absolutely. And we have our first comment today, which is good. Thank you very much to Hawk Meteor. I think he's kind of getting a little bit of my explanation out of me. He writes, goes on historical data rather than LiDAR. So what I mean by that, so for example, Neo cars, they've got like little horns on the top. So they've one in the middle, 2 on each side, and they have like laser kind of vision, should we say, to detect humans, dogs, that kind of thing, road curves, etc. Whereas Tesla doesn't. It's been driving with kind of recording data for hours and hours and hours all across the country, especially obviously US. That's where it's been most successful. And it basically takes that data, and they've got a software or something like that to kind of read that data and implement the car's journey. I hope that makes a little bit more sense, but basically it's a different type of sensor, different type of data.
It relies on the camera's data versus the laser inputs, right? From the LiDAR. And I don't know, I don't understand the LiDAR technology completely, but I do remember hearing that, Elon's not going down that path, didn't sound like.
100%. It just doesn't like the way it looks, apparently, from what I've heard in the past. It might be something different, of course, but
sure. Well, yeah, let's see if it holds here and pushes higher. It certainly looks like we're right at that key level where it could hold and again continue to move. So Tesla.
I'll thank you for the comment.
Yeah, great comments though. Keep them coming, guys.
We have Neo next. As you can see, this chart is a little bit hectic. It's gone up, it's gone down, it's gone up, it's gone down. You can see highlighted areas. So let me jump straight into that. So what we've had in the last week is a bit of a pullback, and it looked like it could continue. But what I will say is these 2 moving averages that are kind of tucked in below have acted as resistance in the past, not accurately, shall we say. So where are we? So April, May, we poked up to that kind of blue line, which is the 50 moving average, poked above it, straight back down, poked above it, straight back down. And what I'm kind of hoping to see here is maybe a poke below it to kind of the $8 level and then straight back up. Obviously, it's a little bit news dependent with Neo at the moment. We do have deliveries coming out on Saturday, which is the 1st of July. But yeah, so going back to the chart, we have that $8 level, which I mentioned, which is the blue highlighted areas. And the red highlighted areas we've got here is the 20 and the 50 failing to cross. It's happened twice. You can see in the top left, you can see right in the middle, and I've highlighted it with a couple of question marks here. Is it going to happen the third time? And judging by a look at the chart, it could well do that. And we could be on our way to $6. Well, 7 first, of course, but then on our way down to $6. But yeah, this is what I'm perceiving the chart to be at the moment. I am bullish on it. Don't get me wrong. We're still above the 2 moving averages. We're still above the $8 level. And we've cooled off quite considerably from this massive move we've recently had. So I don't see any reason why we can't set a higher low and then go on to kind of move towards 9, 10 in the next 3 to 6 months, especially with the delivery numbers and everything going on with the company. It is positive, in my opinion. They have taken their time with it, I must admit, but I do think it is quite positive. I'm going to stop talking now because I always say this, but you can jump in now.
I was about to get in there for you.
I saw.
So I was going to ask you, because I know you've been accumulating and are longer term focused with NEO, but when you see big pops like we've had over the last, call it 2-3 weeks, do you take profits? Do you take some off the table at some point and expect to buy back in when it pulls back, or are you just holding onto your shares and trading for a longer term?
So that's a great question, and I'm going to answer it honestly. And I do take profits. I do trim the positions just because I'm a technical trader. That's why we do these things, these live sessions every Sunday, because I really enjoy technicals. I enjoy breaking down charts and seeing what's happened. You can clearly see we're in a negative downtrend. We have been for 2 years, and it's safety, if anything, to be honest with you, mate. So if you've got, I don't know, for example, 1,000 shares, 10,000 shares, and it gets up to 10, and you're thinking this move is a bit aggressive, maybe take a 10th or maybe take a 20th, and then keep that cash on the side. And if it comes back down to your technical levels or your research that you've done, say for example now, I could buy tomorrow, for example. I'm not saying I am, I'm not saying I'm not. But tomorrow would be a good time to buy, in my opinion, because we've just spoken about that possibility of the bounce.
Right.
But yeah, the answer to the question is I do trim my positions, even if it's not a profitable one. If it's level, I'll trim a few positions just because of that trader inside of me just tells me, be safe, Sean, be safe.
Yeah, I do the exact same thing. In fact, one of my favorite positions to be in is where I've been fortunate enough to get in on the stock. It's moved up. You take, profits, it pulls back, and whether you buy more or not, maybe it moves up higher, you take profits again. And now all of a sudden, the remaining shares I'm in are all at 50% of what I originally bought, or maybe I've covered it with all the profits I've taken if it's had some major moves. And then so now you're in and you're riding for free. So it's just a lot less stressful. And anything you add to it, again, you have like this massive position that you've already taken a ton of profits with. It's Kay and I talk about selling covered calls, very similar kind of thing, and I'll mention it when we get to Mara. But you take some profits off the table, and when you get these pullbacks, it's far less concerning. One last note I'll say on NEO for your other charts is it looks like we're right about 50% of the way back from the most recent run from the bottom to the top. So, going from 7 up to above 10, and now we're back here about halfway. So that, I could see some support here. So another thing to mention, to line up with the moving averages. Yeah, we'll see. I would love to see it bounce. And then go form a new high. How about that?
Absolutely, yeah. And maybe you're hinting towards maybe I should draw a Fibonacci next week on this one, see how it's played out.
Hey, let's see it. Let's see it.
I'll give it my best shot.
All right, I like it. All right.
Okay, right. Next, we have Palantir. Again, I've stepped out back a bit, and we're on the weekly chart, and we can see already you're probably seeing the little caterpillars in the middle, little blue caterpillars. You might call me weird, but that's how I see them. And that's the 20 moving average for a weekly chart, and we've respected it quite well, actually. So that's 4-6 times in the last couple of years, maybe slightly less than that, maybe just over a year. And we can see a big red candle, which we had last week. Big, it was to be expected at some point, maybe not so big, might be a bit too aggressive, but it was to be expected. We had a massive run up, as you can see, from $7.50-ish all the way up to $17, and that's absolutely incredible. It's over 100%. And yes, if you're asking, I did take a few profits off this one as well, just because I'm a technical trader and that's how I do things, of course. But yeah, we can see that the yellow arrow we've got here is the 20 moving average, and it is following up nicely on the weekly. Now, obviously, we talk about the daily all the time, but the weekly is really that kind of stability, from my opinion at least. So if we can get up to the kind of 1150, 1165 level with the 20 moving average, I think that would be really, really good, especially heading into the next earnings, which will be kind of late August, mid to late August, I reckon. So that would be nice if it can kind of come together like that. That'll be another 4 or 5 weeks data, and obviously we'll track that as we go. But last thing to mention on this chart, we've got obviously the red arrow I've got down the bottom there. The volume was lower, but it was red. And I wanted to kind of get your experience on this. Now, to me, that says there's less volume and it's red, but that's not necessarily a negative. I don't know if that's... Surely the negative would be if it's big red volume rather than smaller red volume.
Yeah, so I would agree with that. Also, last week we had the shortened week, right? So that's a trick, and I always forget that. Yeah. So one less day, and it probably makes that volume about average. But yeah, to answer your question more directly, though, if the volume's tapering off when you're getting the selling, that I wouldn't take that as necessarily a negative sign. That's a somewhat positive, right? It's like some profit taking, but we don't have everybody just selling off. It's just, I mean, look at those. How many weeks is that? 1, 2, 3, 4, 5, 6 straight weeks of green, of gaining. So yeah, that's just people taking profits that have made a ton of money. Like you said, a double. And I would think that it's actually okay, as long as it's not, like you said, a big spike in volume. And usually that would come with news, right? I would think.
Of course. Yeah. No, it's interesting. Thank you for your input.
Yeah, or we get some bad news coming. It'd be a bad thing.
I hope not.
But no, this has been a great. I mean, honestly, Sean, when you started covering Palantir, I did not have any idea of it having these moves like this recently. It's been really just an incredible run.
Yeah, it's a massive retail stock as well, so you expect those kind of runs. But we can see with the bars at the bottom, that looks like institutional to me.
That does look like a lot of buying coming in. Yeah, good stuff.
And this one's a bit of an interesting chart. I don't normally draw channels that don't really move with the stock. But you can see this is NVX, and we're on the weekly, and this one's turning a little bit more of a long-term play for me. It's just got the kind of technology and the way that the world is moving. But this is not really the live session for that. But we can see price action last week. We've got a bit of a red candle, kind of similar to the green candle we had before in terms of size, of course. But we are above the moving averages. Obviously, we don't have the 200 because we haven't had 200 weeks of this stock. So we've just got the 20, which is the yellow, and the 50, which is the blue line. But what I wanted to kind of speak to here is obviously we're above the trend line. As you can see, the grey one going up. But there's like a channel of 2 red lines coming down. I wanted to get your kind of thoughts on this as well. So I've drawn the first one from the top of the candle, as you can see, all the way down, and then from the kind of top of the actual bars themselves all the way down. And what I saw when I was drawing this is the further you get down towards the end, you actually have a little channel of actual bodies within that range. Yeah. I wanted to see if you've seen that before, if that's a common thing. But to me, that looks like it's broken out of that trend line. Of course, I would think that. And maybe we're moving up towards kind of 1820. That would kind of be my near-term price targets on the weekly, at least. So it could be another few months, of course. But yeah, I just wanted to get your thoughts on this channel trading.
Yeah, I actually really like this. And I like that when you see channels like this forming and they break, as a really strong sign, actually. And so this being weekly, though, it's not a short term. This is not like, hey, this coming week necessarily you're going to get a move up. But I think that the odds over the next, the odds for the next few months are definitely, I would say, more positive than not, given that break of that channel that you drew there. I actually have of all the patterns, like I really enjoy finding and identifying patterns and doing all this technical work. And the one that I'm really actually trying to get a little bit more experience with and understand more is these channels and exactly how to utilize them a little bit better. So I like what you've done here. And the fact that it's broken out and it's following this trend line up, I think is very positive. Plus you've got the rounding of the 20 and 50 moving averages there. and all this volume. So yeah, I think this is worth watching, and I think you've noted the right stuff to be paying attention to.
Yeah, I think what I'd be looking for going forward, obviously we've spoken about a little bit about price targets and 18, 20, etc. But what I really want to see is like a little bit of a move up and that 20 coming through to 50 in like a more positive way in terms of more direct. I mean, not like just softly. So I'd like that to happen, of course. That might be news dependent, as we touched on earlier, but that's what my thoughts are for this chart going into the next few months, maybe 6 to 12 months, actually.
Yeah, that would be, I mean, if you got up to 1850, that's like a 20% move or so.
Yeah.
Check my math on the Sunday, but yeah, that would be a really nice move right into resistance. It would pull that moving average up, and then we'd be at another really key level, right? So yeah, I really like that you brought this to our attention. Thanks again.
Yeah, that's right. Like we say, it's a long term rather than a short term. Obviously, we do short term perspectives, and this one is a bit more of a long term one. But yeah, I'm glad you like it. That's good. I'll keep covering it, shall I?
Yeah, I think so. Thanks, Sean.
That's it for my set. Obviously, I'll hand you over to the wonderful Nate now. He's got great charts, great perspectives, and great what's it called? Newsletter, of course. Every Sunday, all about covered calls, and it's a really good read. I really enjoyed it. I watched it this morning, and I thought, wow, this guy's doing really good things in terms of successful calls, shall we say?
I appreciate that, Sean. Yeah, I posted about using covered calls with Mara and 40% gains over the last couple of months. It's been a great trade. So yeah, appreciate that. And I'll jump into my charts here. And actually, before I do, let's get the charts. I'll say that for the end. So stay tuned. So the 1 hour candles for NVIDIA is what we've got here. At first, close at about 422, right around the 420 level here last week, which is also for this 1 hour where the 150 moving average comes up and where I've got support drawn from previous levels. So I'm looking at potentially another channel here, right? It looks to me like we've got 420 up to about 435, and we've retested that both sides a number of times. If we can get this hold here, maybe we get another push back up, and really trying to look for a break out of these levels. I don't know that. I mean, it's going to be pretty quick trades if you are trying to just trade the range. But if we get a break above or below, then, below, I'm looking for it to come back and retest 404. And above, I think we're right up to try 450 next. So the 1 hour gives you a little bit more shorter term perspective, and NVIDIA just continues to rip. So I'm looking for another breakout.
Yeah, I like this range. I think the next few hours is essentially is key data, isn't it? So if you can bounce off of that 150. But if you can bounce off 150, then you've got the smaller moving average to get through as well. So that could be quite challenging. So it'd be one of these to kind of watch for me personally, 100%.
Yeah, it's definitely tightened up, right? You can see the prior range was a little bit broader between the 376 and 395. And so, yeah, this is just a little bit tighter, but not too much. And I feel like this is what you want to see if you're a bull. If we've got the big extended move higher, and then instead of selling off and pulling back and kind of back into that lower range, it's just continued to move higher, form another range. Now, I would expect any additional breakouts to be smaller and smaller as you go. But yeah, this is still remaining very bullish and positive in my mind.
Absolutely, yeah, we're doing great things.
More AI fun. Let's see. So what do I have next? There we go. The candles for Marathon Digital. So this is all those opportunities. That's 40% right there, ladies and gentlemen, of collecting covered call premiums between this range. But last week we mentioned on the call, in case you missed it, maybe go back and check it out on the video, that 946 level started holding up. And we noted that, saying if that holds, instead of going all the way back to retest the lows of this range, in fact, it would be very bullish to see it push higher. And if we saw a 1075 break, that would be a potential breakout situation. And sure enough, that's exactly what we got. The 4 hour candles here show that 20 moving average pushing right up, and the candles came back to test it. If you were watching this, you got a nice opportunity to get in if you wanted to use the moving average to, as a buying opportunity entry point. And then 12.98 looks like it's going to be some tough resistance. So $13, call it. But if we do get above that level, next targets I've got up is about $15, 15 to 15.30, and then 17.75. So big moves potential. But given this breakout, 13 could be a little bit tough. What are your thoughts here, Sean?
My thoughts are, I mean, I always bring this up, and maybe a bit of a broken record, but obviously it moves with Bitcoin. And I've seen that quite a lot recently. I've been tracking Hive as well, which is very similar to Mara, especially in the way it moves. But this one, I think, because we've had a little bit of a move on Bitcoin, I think, over the weekend as well, if I'm not mistaken. I mean, I could be completely wrong. But and
hold
that would
above
obviously
30.
push it. Yeah, exactly. And that's good news for Mara as well, and your cover calls. So if you're going above 13, is it really 15 the next level you have? Because that's fantastic, isn't it? Because that alone is about 20%.
Yeah, it really is what I've got. I mean,
so parabolic.
That is a trick with these, right? These kind of stocks is that they're very they're going to make big moves. So the reason I was able to collect those big premiums selling covered calls is because the potential for those big moves to happen allows for a lot of cash to be collected. The trick is when it moves, you can miss out on all these gains because you're capped at where these options are. So at this point, I actually stop selling covered calls on it and strictly be trading it for the upside until it forms another bit of a range. But yeah, this is now in breakout mode, and I agree with you. Just got to follow Bitcoin and see what Bitcoin does. If it holds 30.
Yeah, I think I'm for a good one there, especially the technicals on the Bitcoin quite well. But on the technicals on this one, you can see the two touches of the 20-moving average. If you can come down and touch that and then break through the 13, and then so I always look for breakouts myself, and if it goes above 13 and comes back down and retests it, that's when I'll be looking for an entry point, depending on macro and all the other indicators we should be looking for when trading. It's I think that looks good. I think it looks really good.
Yeah, I'll be watching that exact move, the break above and retest at 13.
Yep. Yeah, I'll write that one
down. Nice, take a note. All right, so DraftKings is up next. Actually, Sean, you got me looking at DraftKings a little bit differently. So you noted that this triple top here that the 4-hour candles are showing right at that 2640 level, between 2640, and that's tough, right? I mean, you get 3 attempts to break through and you get rejected. That's not usually a very bullish setup, but it doesn't necessarily mean it's a bearish setup either, because it's 3 attempts. I mean, if you get 2 attempts and then a big pullback, that's a pretty big failure. But this 3rd attempt, and then we're still holding above or right around the $25 range. I guess it did close above 25, but right around that 24.50, 25 range. It's kind of constructive. So I'm wondering if we don't just trade sideways here for a bit. And the broader range of a channel I've got here would be all the way down to 22.75 and then all the way up to 26.40. I like personally accumulating shares at between 22.75 and 23.30-ish. And for a play to more upside and back up to 26. I like it longer term as well, but yeah, that's what I'm looking at. If you wanted to take a little more risk, you can see these 4-hour moving averages, the 150s coming in here in that middle range, right around 24.50. So I think we pull back in that mid range, you could accumulate some shares there as well, because maybe it doesn't pull all the way back. So that's my thoughts there. Anything to add, Sean?
Yeah, I like you mentioned the triple top here, and sorry to bring that to your attention in the past, but but if we do get a bounce off this moving average, just like you said, and we retest that and possibly break it, that accentuates the fact it would be a stronger support, in my opinion, and that's kind of generally how you perceive things through trading. But yeah, that would be, if it did break above that, came down, retested, and move on to kind of 27, 28 or wherever. That to me would be a very solid support line moving forward, 26.40. But on the contrary to that, if you do break that 150, I know you said you were looking to kind of buy or accumulate shares at 22.75 around that 23 level. Mm-hmm. Would you be looking at this chart, or would you perhaps go back on the daily, see what 150 is there? Because obviously, looking at this chart, I wouldn't buy, accumulate shares at 22.75, because if it breaks that, it breaks it, doesn't it?
Yeah, so I see what you're saying, and you're right. I would be looking at multiple time frames, like especially when it comes to looking for support levels. Because if we do zoom out to the daily and you get that good support there, actually, I could probably take a look at that right now or on the call, or on the, looking at DraftKings. But yeah, I would definitely look at the daily, see if we get some moving average support, other points of confluence, and if there's daily levels that are a little stronger, then I would be looking at that. This 2275 actually lines up where the daily candles had pulled back to and formed a bit of a base and retested a couple of times. So these two spots here are the lows of those days, and so yeah, it's definitely worth pulling back and looking at those things. I'll say the 50-day moving average is coming in right around that 23 level as well. So that'll be worth noting.
That is exciting, actually. Yeah. No, good stuff.
Great point. All right, IWM. So the small caps. I keep looking at small caps. There is a reason. Now, I do think it's worth looking at the Russell 3K, which I haven't gotten to yet this weekend, but I'm going to look at tonight, because the Russell 3K is both the 2,000 small caps and the 1,000 large caps. So it's a big, broad look at everything. And the reason I'm looking at all these IWM is a small cap ETF, the Russell 2000 ETF. And so I'm looking at this because we had this big tech trade talked about last week with, the 7 names or what have you that are really pulling everything to the upside. Well, if we want continued upside action, then you want to see all these other sectors follow suit, right? Come along with them. And I was hoping to see this small range between 184 and 188 break to the upside for IWM. It didn't last week. It pulled back here. We're going back towards 179. And that's not necessarily bearish. It's just showing a little bit signs of a pause. So hopefully if you did get in on that breakout last week, you took some profits because it's pulled way back. And I wouldn't be surprised if it goes all the way down to, try 179 or a little bit below. But if it holds there, then I expect it to push right back up and try this range again. So just a little bit of notes here. Not really a trade I see necessarily heading into next week, but I am looking for that 179 to hold.
See, I see 2 things here. And the first thing is you really like your 4 hours this week. I'm really enjoying it because it gives me a bit of as well, because I never look at the 4 hours. I don't. And that's why I like these sessions where we can look at different time frames and get different perspectives. But,
yeah, absolutely.
And the second thing I see is that 179 level is almost a second opportunity for a breakout trade prior to where we were back in May. And the reason I say that is because of the volume bar that followed hitting that 179 back in May. Is it May? It is May. No, June.
Yeah.
I can't quite see because the dates are backwards in America, so I can't quite read them straight off the bat anyway. So that's 1st of June, 5th or 6th of June, that kind of area. But yeah, so that volume bar is massive, isn't it? And obviously it might be coupled with the touch of the 20 moving average, of course. But I'd be maybe looking to enter at 179, thereabouts, and keeping a fairly tight stop loss. And if it doesn't play out, it doesn't play out. But we'll see. That's what I see anyway.
Yeah, and you got it right at the beginning of June there. I love that.
Yeah, and I'm getting used to it.
It's funny. I've gone and done work over in UK, and every time that's the one. I've actually had software programs, and there's all kinds of stuff that was involved. And the only ask they said was, "Can you make the dates option?" I was like, I get it because it's confusing. I love it. So yeah, I think paying attention to small caps, getting back to full circle of the chart here is worthwhile. And I like your point. If we get 179 to hold, then yeah, you get another opportunity potential for some upside. All right, so this is the portion where we usually kick it over to our friend Kay, but this week instead, we're going to take a look at his charts without him here. He has no chance to defend them.
Sorry, Kay.
We'll see what happens. So yeah, I'm going to jump in first here on Apple. These are the weekly candles, and these just make me very sad. I'll be honest. I don't say this when Kay's on, but it makes me sad because I didn't buy enough shares of Apple. I mean, what a run. I don't know about you. This looks very extended to me, and it's hard. I feel like though I've been saying that for like 2 months, and it just keeps ripping higher. So are you in the same boat with Apple where you feel it's hard to get in here and yet it just keeps powering higher?
Yeah, this is another good example of the trend is your friend, but sometimes those trends end, and we've seen that countless times in previous years. And I think a lot of people are just waiting for this trend to end. I know I am, and I won't be trading. So I don't really trade Apple. I know it's one of the most traded stocks in the stock market, and obviously it would make sense. But yeah, for me, it's a stay away stock. It's not something I get excited about, of course. But what was interesting, Nancy Pelosi bought calls for this, so I don't know what that means.
Oh, she says
This
trade
and
okay.
Microsoft. Yeah.
Oh, that's right. I saw that. That's right.
Yeah.
This is
And
Microsoft.
remember when she bought NVIDIA before the big run up? Yeah. So she knows stuff. But back to the technicals on this chart. Let's keep it to where we are.
All right.
But yeah, maybe a consolidation would be the most ideal thing. But like you say, it just keeps going. Absolutely keeps going. And who knows? We might set another all-time high.
Yeah, I mean, maybe we get. It got 3 downgrades this last week, is what is noted here from Kay, which I thought was interesting. Bank of America, Piper Sandler, and Oppenheimer. But I'm guessing those downgrades were like from, a buy to a hold or something like that, because it's not. I can't imagine it's going to be a sell without looking. I'm really just speculating, but it's just going from hey, we've really kind of achieved the price levels that they were expecting. But
the RSI as well, you can see, is very elevated, 75.
Yeah.
I know obviously it doesn't mean much on the bigger side of time frames, at least in my opinion, but it's something to look out for, that's for sure.
Yeah, it might be due for a bit of a pullback. I mean, when it does pull back, look, you can see historically it sells off for several weeks. It's not just a slow grind. It seems to just really sell off almost as quickly as it moves up. So yeah, Apple.
Yeah.
Google I like a lot. So I'm going to jump into this one first as well, if you don't mind.
You go ahead. You take all of them. Yeah.
Oh,
you are the
host. All right, I'll take advantage. So this one, Google's had this nice stair step. This is a little bit more what I like to see in as far as moving up, right? Because instead of just these sharp moves up and sharp pullbacks, you get these consolidation periods that act as support, and a stair step and keep moving higher. So I like Google overall for a long term. And when I look at Kay's charts, I think a little bit more long term than near term trades, based on just the time frames he uses and what have you. Here we're right back at the high from August, back below it, which I think is kind of negligible. Really, we're just kind of oscillating around it. And I think that's good. It allows the moving averages to catch up as they've been doing, and maybe forms a bit of base, like I mentioned, to then give it a go up to 130 again. So this is much better, more constructive, in my opinion, than seeing something that's just ripping higher with no pausing whatsoever. Do you feel the same way when you see charts like this, or I guess what are your thoughts?
Yeah, I see the same thing in terms of I like when the moving averages have time to come up. That's what I was kind of hoping for Palantir as well when we looked at that. But I don't know if this is something to be concerned about or not, but we can see a slightly lower low. I don't know if you can see that as well. But one at the end of May, we dropped down. Obviously, we bounced straight back up. We gapped straight back up the next day. But that is a low. We've set that low. And in a way, if you drew a little trend line from that low upwards towards the kind of 20-minute average, I'm hoping I'm being as descriptive as possible. We kind of broke that trend line, came down.
Yeah.
And at the same time, we've broken that 122 level, which is obviously the high as August, as you mentioned. So I know we came up, but it looks like we kind of bounced off of it as well. So it's kind of a key point, I think, for Google. So this could actually be, in my eyes, a bit of a resistance point, with the 20-minute average being above it, that support line that we spoke about from the high of August, and that break of trend line kind of coming up, retracing and bouncing back down. But if you're looking at the more positive side, like you mentioned, that 50-minute average coming up would be a key support. But for me, it's short-term bearish.
What about the trend line, right? So if you look at the trend line from
the bigger trend line, yes, of course.
Yeah, the longer. So the short-term trend line, right from the top to where we're at, is definitely negative trending, right? Similar to the SPY chart I had earlier, where we rolled over a little bit. But longer term, going all the way back, I don't know what month that is, but I'm going to guess around March, April timeframe. I think we're still above that positive trend, right? Which is kind of in line with the 50 moving average that he's got. But Yeah.
What do I know? Maybe I'm just trying to tear his charts apart.
Well, that's what we're here for.
No,
So
okay.
I think that it's the same kind of spot with the Qs, which makes sense, and what we're seeing with SPY, which is we've got a bit of a pause, a bit of a rollover, but when we zoom out, it's still, you know, the trend is still to the upside. So worth watching and see if I were to draw a line there, I wonder if it would break, if we're gonna, or if it'll hold. That's what I'd be looking at.
Yeah, but no, it's a good chart.
Yeah. SoFi has got that Palantir feel, which just went crazy, and just great gains. I've talked to a number of traders who've been trading this all the way from 480 all the way up to that $10 level, just making really good. I got out a little earlier than that, a lot earlier, but that's okay. And I don't remember if Kay is in SoFi or not, or trading SoFi or not, but what I would say is, you know, that 705 level, I don't know if he's got 705 here. That's the level I've got noted. He's using his fib level, so he's got 724 and 653. I totally agree with 653. I've got 705 as a level above that, and that's where I think we kind of, I would not be surprised if we see the shares pull all the way back there. There's no real reason for them to stop, I don't think, beforehand. Given that huge push up, there's going to be people taking profits. And yeah, I mean, the volume is good though. So it's interesting to see if it'll stop, you know, where it'll stop, and then if it goes and tries to make new highs.
Yeah, you said around that 7 mark. I've got 650 to 7 is my buy zone.
There you go.
I've drawn a little rectangle for, so we're kind of aligned there, aren't we?
Yeah.
But it's interesting to see in this chart, the 20-moving average is kind of acting as a little bit of support.
Yeah, it is. Look at that. Give it a little bit of a bounce there. I didn't notice that. Yeah. Still, maybe this week we see it hold up here. That would be really interesting. Right back at that prior high. And if it just kind of sits tight right here.
And even if it doesn't, if we break the 20, the 50 is kind of coming up to that area where we've been speaking about, that $7 area.
Yeah, 650 to 7. Yeah,
that sounds good to me for future trades.
So that's what I'm thinking. I'm right there with you. Is it, you know, if you missed it, you missed it. You kind of sit back and wait and see what happens. But 650 to 7 is a great accumulation zone. And then try again. Let's see if it tries again for highs. And then you can use, you know, really that 576 level if it's breaking below that as your stop, right? Because you don't want it to, that's the moving average there, I guess, maybe 565. But somewhere in that, I like that 576 level, actually. Let me see what I have on my notes here. Yeah, use that as a stop. I mean, that's pretty wide, but the big moves SoFi's been making, you might need it to be wide, otherwise you get stopped out.
Yeah, and I think another thing to mention as well, that the next earnings will be around about August as well. So if we get that kind of price movement, it will kind of align with the earnings, which could obviously be a negative or positive catalyst. So we'll see what happens with that as well.
Yeah, SoFi's been crazy. All right, last one of the day, Intel. This is Kay's favorite. I like it because it's making higher lows and higher highs. I mean, that's the biggest thing that jumps off the page for me. He mentioned this 21 DMA crossover, the 50. I guess he uses a 21 moving average. I should note that. And that's also, you know, a positive sign. But, you know, the continued higher lows, and then now we're getting higher highs. We broke out of its range. It actually looks pretty positive, which is kind of surprising to me.
Yeah, no, absolutely. I mean, it's definitely moving in the right direction. It's a bit of a loose channel, but you can kind of loosely see a channel, if that makes sense, which is nice.
I kind of got to sit back. I can see it if I sit back.
Absolutely. I mean, that 37 for the future will be a nice one to break through, because obviously when you see massive selling points off of a certain level, that obviously means that everyone's got an order there. Not everyone, but a lot of people, maybe institutions, have big sell orders at that point.
Well, yeah, look at that. If you go left on the chart, I think, sorry to interrupt, Sean, but you hit on something that I like to note a lot when I'm trading charts that have, you know, moved down and now are recovering and showing this rounding and pulling back up. Well, if you look to the left here, between 34 and 37, there's a lot of action, right? It kind of stuck in that range for a bit before selling off. So a lot of folks that were buying at that point have now been holding the bag, so to speak, and waiting to just get out and break even, right? And so when you get it pushed back up to 37, I think a lot of that volume we see on the left side of this chart probably just breaking even, just let me get out. Plus, there's going to be some profit taking, of course, from the folks who got into the lower points. So, I like to look for those kind of levels. And to your point, if you can get above them, then off to the races.
Just add a question on this one. I don't know much about the Intel stock in terms of the fundamentals and all of that. I wonder if you do, and if you see Intel being a big player for the next 10, 15, 20 plus years. Obviously, it's probably for K, but maybe just in case you knew. It's been around for a while, so. It
has, and so I'd really be interested in what K's thoughts are as well. So we'll definitely have to ask him next week to get his take. I'll say I'm not an expert, but what I've heard and read is, in their space, in the chip space, you've got NVIDIA and AMD who are using, the latest and greatest stuff and creating the latest and greatest. And Intel went a different direction. I don't know all the technicals, but so now they're playing catch up is how I understand it. And so if they can catch up and, they've got all this funding coming in through, the U.S. is pumping a bunch of money into chip manufacturing and all that. So they're setting up shop and they're taking advantage of that. So, I think it makes sense to take a look at it, and there could be some upside. But from my understanding is they're really in a position of needing to catch up to their competition. So it's a somewhat tough spot. And that's why I think it's sold off so much.
Yeah, that's good to know. Thank you for that.
Yeah, absolutely. So let's see if I can get this sorted here. This has been a great week of charts, and I don't know about you, Sean, but even without K here, I feel like we got through a whole bunch of good stuff. We got a lot of information out, and I just miss his options information. That's what I miss.
Yeah, so do I. It just gives you an extra bit of perspective, doesn't it?
Yeah, we'll have to get him. So next week, I don't know if we're going to be on. We'll figure that out. But if you guys are following along, appreciate you subscribing. And if we are on next week, we'll give you all the charts like we always do. If not, we'll try to get something else posted along the lines of educational type videos, or just maybe some looks at different stocks we're taking a look at for trading. But if not, we'll be back the following week for sure, and we'll keep things rolling. But for final thoughts, actually, Sean, let me go to you before, and I'll wrap it up.
Well, I'm going to do that thing I always do, and that's subscribe to the channel. I know it's not a bit boring, but no, it really does help us out. And if you are watching this on live or post recording, then obviously like it. It gets it out in front of more eyes, more traders, gives a bit more perspective for people. So yeah, hit that subscribe button. We hit 50, which is half a century. The next step is the century of 100. So if you can help us get there, then fantastic. But yeah, that's all I've got for you. Obviously, trade safe. But I think Nate's going to touch on that, so we'll hand over to Nate for the final part. Yeah,
I appreciate that, Sean. And 50 subscribers. Thanks, everybody. We want to get to 100 twice as fast, and appreciate the support. Gets us motivated every week to come out here and talk. Appreciate the comments. Hawk, thanks for the great comments there and for your questions this week. We'll always get to everybody's questions every week, so keep those coming. And, heading into the week, as always, trade wisely, get as much information behind your trades as you can before you make them. And then follow your plans, right? If you've got stop losses in place, respect them. Don't change plans mid-course. Otherwise, what are your plans for? So that's my big note going into the week, and wish me luck in my adventures in Vegas. And have a great week, everybody.
Yep. Good luck.
Thanks, Sean. Appreciate it. That's the plan. That is the plan.
Yeah, of course. Awesome.
All right. Thanks, Sean. It's been fun.
See you later. Bye-bye.